Hi there. This company, HIMS and HERS Health, is quite interesting because as you can see the stock price is quite volatile. It goes up $20, then down to $3, and then an increase in the stock price over 300%. And this is amazing because this company keeps growing. They reported the revenue, their growth rate for the revenue was over 60% in 2023. And also in their subscribers, a growth rate over 40%. And this business is quite interesting because the market cap is quite small, about 3 billion. And if they keep growing year by year by over 60%, then the market cap can go to 10 billion or even more, to 40 billion. So you can have a 10x on your investment if this company keeps growing year by year. So far, as you can see, the revenue went up, the subscribers grew a lot, and they became profitable. So these are good news for investors, especially for shareholders who bought or invested in this company, HIMS and HERS. But as I said, as the market cap is quite small, about 3 billion, there is still room to grow. And let me show you why I think this. First of all, as I said, revenue has increased by 60% in the last year from 2022 to 2023, from 500 million to over 800 million. So this is an amazing growth rate. And as you can see, also the subscribers has increased by over 40%, from 1 million to 1.5 million. And as you probably know, this company is an online pharmacy. They are selling different supplements and health and wellness products for hair regrowth, anxiety, depression, weight loss, and many others. They offer a subscription service. So as you can see, their products are quite in demand because many people face weight problems, they have depression, anxiety, and also hair problems. So as this company has only 1.5 million subscribers, they have a lot of room to grow because only the US has over 300 million people, quite more than 300 million. So you can easily see from their numbers that they can grow a lot. As long as they report higher revenue in the future, they might maintain this growth rate over 60% or maybe less. But if they keep growing and also their subscribers, then this company will continue to grow. Moreover, they also announced that their outlook for 2024 is that the revenue be about 1.2 billion. And they are expected to become profitable, as the CEO said in their statements. Let me show you. As you can see here, we expect to eclipse 1 billion revenue and deliver our first full year of net income profitability. So if they achieve this, and there are chances, they are likely to happen, then the stock price will keep going up. So as you can see, and as I said, in the last quarter, Q4, they achieved profitability. They reported 1.2 million in net income and their free cash flow was about 10 million. So this is a good improvement from a loss in 2022, fourth quarter, a loss of 10 million to a profit of 1.2 million. And so for their free cash flow, a loss of 9.3 million to a profit of 10 million. And for the full year, they reported a loss of 23 million. But their free cash flow was about 47 million. So the numbers are getting better and better. And as the CEO said, that next year, 2024, they expect their first full year of net income profitability. So for 2024, they will report a profit. Plus, you also have to be aware that if they report higher numbers than expected, then the stock price will react even more. The upside can be even higher. So, as I said, this company, HIMS and HERS, has currently 1.5 million subscribers. And only the US population is over 300 million. So you can easily see the upside, that this company can grow a lot if they can attract more clients. You can also look at their growth opportunities to acquire more customers. So as they have only 1.5 million subscribers, they can grow a lot in the US. Plus, this is not all. They also plan to expand into new geographies. They already expanded into the United Kingdom in early 2021. They acquired a company, Honest Health, and they renamed it to HIMS and HERS. And then they want to expand in Europe and beyond, as you can see here. So if they succeed to expand in other countries, then this company can be a great opportunity for you. As I said, they only have 1.5 million subscribers. And based on those subscribers, they make, as you can see, over 800 million. Imagine if they reach over 10 million subscribers, then the revenue should go 10x higher. And if that happens, and if this company keeps growing more in the future, then also the stock price can go 10x from the current level. That can also happen. So this is the upside, the reward, the opportunity. Now, maybe you wonder what's wrong with this business. If you look at their past performance, the revenue has continued to go up from 200 million, almost 300 million in 2021 to almost 900 million in 2023. So the revenue keeps growing. And as you can see, their losses, loss from operations, keeps going down. This is a great improvement. From a loss of over 100 million to a loss of 30 million. And for 2024, as the CEO said, they expect to turn this business profitable. And if that happens, they deliver their guidance that the stock price will keep going up. And especially as the market cap is quite small, about 3 billion, there is a lot of room for this company to go up. Not only in the number of subscribers and revenue, but also in the stock price. So the price can go back to $20 as it was in 2021, and it can go up even more than that. They have room to grow, more opportunities, not only to sell those products for hair, anxiety, depression, but they may also expand into other areas. And that will be a plus for this company, HIMS and HERS. So as I said, this company has a lot of room to grow. Now, if you look at their balance sheet, you can see that they have over 200 million in cash. So that's good. And the best part is that they have no debt. And this is great. They can fund their operations only from their revenue and report a small loss. This is quite great. Now, as I said, this is the upside. This company can go up a lot. The market cap can go to 10 billion if they keep growing. They become profitable next year as they expect and keep growing. So the upside can be quite high if you want to invest in this company, if you like their business model. Now, you also have to look at the downside. What's the risk? What's wrong with this company? Now, if you look at the number of shares, you can see that it's quite stable for the last 2 years, from 2021 to 2023. It has increased only a little. So the number of shares is about 200 million. But if you look in 2020, you can see that in 2020 they had about 45 million. They issue more shares to raise more money from investors so that they can fund their business. And that's why the stock price has declined by 80%. But as now they are expected to become profitable, as the CEO said, and increase the revenue even more in the future, you can expect the number of shares will be stable for the next 5 years. Of course, only if they become profitable. Now, the second risk is their huge growth rate. As you can see, their biggest expense is marketing. They made almost 900 million in revenue in 2023, but they spent about 446 million in marketing. Now, this is not bad as long as they keep pushing, they keep growing the business. You can see that the revenue, the growth rate of their revenue is about the same with the growth rate of their marketing expense, quite higher for marketing. So, if they stop advertising, then the revenue will go down. You have to be aware of this. Because if the US enters a recession due to higher interest rates, high inflation, then people will spend less. This is obvious. We all know this. But their marketing expenses will decrease because people stop spending. And when they reduce their marketing expenses, also the revenue will reduce, will go down. And if their growth rate slows, let's say they might not report a growth rate over 60%, but less, maybe 18% or 2%. If that happens, you have to be aware that the stock price can go back to $3. Of course, this might be in the short term, 1 year or 2 years. That can happen. You have to be aware of this risk. And then, when the bad weather goes, they can start advertising more, to invest more in marketing and grow their revenue. So the stock price can go down to $3 and then rebound back to $10. That can also happen. So you have to be aware that this is a growth stock. Their growth depends on advertising. As you can see, their biggest expense is marketing. And if they stop the gas, the growth rate stops. It will slow down. So this business can grow a lot in the future as long as they keep investing in marketing. They increase their expenses even more in the future. And this is the risk. You have to be aware of it. As I said, if you believe in this company, that their advertising, their marketing strategies are efficient, then you can take advantage and invest in this company and have a 5x or 10x in the next 5 to 10 years. But if you don't like this company, their products, what they sell, the way they operate, then you have to be careful because the downside may be quite high from the current level. As you can see, the stock price has already started to decline by 16%. So it went up when they reported that huge growth rate and their guidance that they expect profits next year. But if they don't deliver those guidance, in 2024, they don't become profitable as they announced, then you know what will happen to the stock price. It will go down back to $6 or even less. So this business, as I said, has a lot of room to grow. But you also have to be aware of competition because they are not alone. Many companies may want to do the same thing, to follow the same strategy, to invest a lot of money in marketing, to promote their brands. They may come up with other names, and that can reduce their profits, their margins. So you have to ask the question, what's their moat? What's their advantage? If they have an edge. So you can easily see that this company is based only on marketing. They don't have a real moat. Of course, as long as they keep investing in advertising and attract more clients, they'll do great in the future. And so your investment. So you don't have to worry about that. But if they face problems because of competition or maybe a recession, then you know what will happen to the stock price. It will go down. So you have to put in balance the risk, first the risk, and then the reward, how much money you can make. So the downside from the current level might be a 50%. And the upside in the long term, if they succeed to grow this business more in the future, can have a 5x or quite even more. So it's up to you how you want to invest. And if you have other questions, please let me know in the comments.